Hello friends, Namaskar and welcome all of you to my channel. I hope all of you are doing great. Today let's discuss about again to just discuss the how we solve the questions about the lease. For that reason I have used this question from the ACCA which would provide the wonderful learning materials friends. Even though you are a student of let's see the BBA level, yeah, MBA level, yeah, even the professional examination like your ACCA and CA examination. I hope today discussion would be important for all of you friends. And basically as you know that lease could be operating lease or the financial lease, but particularly this is the case of financial lease which is long term in nature, and operating lease is simply the short term in nature. Anyway, now this is about your financial lease or capital lease, you can say that. And lease period is the 20-year, while lease payment in dollar is the 80,000 during the initial term, while 1 lakh per year during the extending period of the 5 years payable at the end of the year. That means after this first 20 years, the lessor would charge 1 lakh per annum as a lease payment. So lease payment would be by the lessee, that you need to understand here. And the lessee, like you spent initial direct cost at the time of lease commencement date in dollar is the 25,000, while interest rate is 6%. So 20-year cumulative discount factor, which is given in the question, by the way, 11.47. But remember, if this is not given in question, don't worry. Either we say that we take the reference of annuity table, yeah, we can use this formula, that is 1 minus, that is PBIF whole divided by I. PBIF means 1 by 1 plus I to power n. So you would have this 1 minus 1 by 1 plus I whole to the power, this is your n, and then whole divided by, that's interest. So is 11.47. Now question is about what would be our required is that present value of the lease payment, first case. So present value of the lease payment, simply we can say that is a, what is our lease 80,000 into, we say that is a, this is 11.47. okay. So you would have a 9,17,600 is our present value of the lease payment. Okay. Now second question is about annual depreciation expenses using a straight line approach. And before that, if you have to understand this value and how we record the journal entry, simply we say that that is lease asset account debit to lease payable account. Okay. So in asset you have to show this value is how much as a dollar, that is 917,600 as a lease assets. And simply this is our lease assets. And what about the case of liabilities here? For liabilities you can use the lease payable, the value will be the same, that is 917,600. This way you could show your accounting equation. Remember friends, this is your lease assets and this is our lease liability. There is no any effect in the equity part. Now what about the annual depreciation expenses? And for that reason you need to understand the given information again. Since lessee spent 25,000 at the time of lease commencement date, so that is why you, what you do here friends, to find the annual depreciation charge, how can we find it? At first you need to understand your present value of the lease payment. So what I do here, this is present value of the lease payment. Okay, I use the equal sign here. So this is present value of the lease payment plus, since lessee spent 25,000, so this is 25,000, this is called the total value of the assets. Okay, and divided by lease period, since lease period is how much, this is the 20-year. So that means your depreciation is how much, this is 47,130. When you record the journal entry, simply you can say that friends, this is depreciation account debit to accumulated depreciation account, simply you can say that. Okay. Now when you prepare the in balance sheet, what do we do here, lease asset value, that is the present value of the lease payment minus accumulated depreciation, we can say that. Now the question is about what would be your carrying value. Carrying value, or you can say that book value, sometimes we say that net asset value. So in this case, remember, as I already solved the questions, like your what is our value of the assets? Value of the asset, as I explained earlier, we do this value. Value of the asset is, yeah, this is, yeah, 9,17,600. Okay, this is 9 lakh plus our, this is, we already solved this question, that is 25,000. Okay, then I would use the bracket here. So you have to exclude the depreciation. We have just calculated this one. So that means our carrying amount at the lease commencement date, that means lessee would record as a carrying amount is at the end of the year, that is 8,95,470. Okay. Now again the question is about what would be the lease liability at the end of the year 1. What is the current liability? Yeah, non-current liability at the end of year 1, and how the lessee report, like you report it in the balance sheet. So before that, you have to prepare the lease amortization schedule, but basically this is for the 20-year case. Otherwise, in 20 year it will be automatically amortized. So this is the 0. Okay. So present value of the lease payment is, we already calculated, 9,17,600. Okay. Okay, since the question is about 1 and 2 year, so that I would use just 1 and 2, and the lease payment is that is the, each year is the $80,000. Okay. Now remember, financing cost, or you can say that interest cost, is simply, we could find it, this is our lease obligation into our interest, 06. Okay, this is our 55,056 our financing cost to the lessee. And what about the reduction of the lease obligation? Remember, lease payment means finance cost plus reduction of lease obligation. This is similar to loan amortization schedule, right? Then this value minus this. So that is 24,944. Now what about the lease obligation at the end of the 1 year? So lease obligation at the end of the 1 year means this value minus this. Okay, that is 8,92,656. Now what about the second year case? In second year also you would have a same value, friends, 80,000. Okay, and the financing cost, gradually it will decline, remember, because your lease obligation is now this value into 0.06. Okay, 0.06 approximately, you will find this value. Okay, so this value is now this 80,000, this value minus this. That is why your lease obligation is now this value minus this. In this way you would be simply solving the questions, and at the end of the year naturally it will be amortized. Now let's move to the our required question. Total lease liability at the end of the 1 year is, what is the lease liability? Yeah, this value. Lease liability at the end of the 1 year. Okay, this is the case. Now current liability and the non-current liability at the end of the 1 year, we see that. Remember, that means at this date your current liability would be, because this is the amount you need to pay within a year. So this is our, simply you can say that this is our current liability, or you can say that short term debt. Okay, short term debt you can say. Okay, now what about the other one, friends? What about the total liability, total lease obligation, that will be amortized over the, yeah, during the 20 years. So this is 8,66,215.36 our long term liability, friends. Okay, so this way you could prepare the lease amortization schedule by using the effective interest method and that will clarify whole calculation. Now the next last question is that balance sheet reporting as per the lessee. In balance sheet, what we do here, in most of the things we have discussed here, in balance sheet we have a present value of the lease payment. Yes, that is 9,17,600. So in balance sheet there is a lease assets. If this is the lease asset or lease apartment, then we have to exclude the lease, that is the annual depreciation charges we have just calculated, that is the 47,130. So that will provide you the simply the, we can see that carrying amount we can see, or the net asset value. Okay, but carrying amount is different, don't be confused here. Since lessee spent 25,000, so that is why your value would be this much. Okay, now what about the case of your current liabilities? Under current liability you will be showing this value, while under the non-current liability this value. This way lessee would present and calculated the needful calculations and analyze the situation. I hope that whatever I discussed today, it would definitely enrich your understanding level about the lease concept again. So before that, you could take the reference of my previous video about the lease concept, and then whatever I discussed today, it would be add value to your discussion part, friends. Okay, thank you all of you for watching this video. If you really like this content, please like, subscribe, and also share this channel. Thank you all of you for watching this video. Please take care all of you. Thank you.